And we're back. It's your daily crypto news for Thursday, May 2nd, 2024. My name is Matt. Got a couple things on my radar. First, the Fed didn't change its rates yesterday, and so I think that's the right move. And Bitcoin dropped a little bit before the Fed was announcing their rates. Everybody said that's the reason. I think Bitcoin is just doing a big correction before some big movements. But whatever the reason, people say, there you go. The Feds didn't change their rates. And so one thing I want you to watch is Plan B's recent video. It's called Plan B's Bitcoin Prediction for May of 2024. Link is in the show notes, or if you're on Substack, you can find the video on the page. That's what to watch today. It's a slow news day, so let's get into today's news. The Build on Bitcoin project announced the launch of its first phase on Wednesday, enabling decentralized apps or dApps to interact with the Bitcoin blockchain. The BOB mainnet is coming online with $300 million of total value locked, and over 40 dApps are already available. Build on Bitcoin is intended to be a hybrid Layer 2 network on the Ethereum rollup that merges Bitcoin's global adoption, liquidity, and proof-of-work security with the decentralized finance DeFi features of Ethereum, smart contracts, wallets, and access to stablecoins. The Build on Bitcoin team said it's time to end the cult-like feud and unite the two largest Web3 ecosystems to spearhead mass adoption together. That's hilarious. You're not ending any cult-like feud because you have a Layer 2 system that's probably going to get hacked and lose a lot of people money. But hey, you know what? It's creative. Speaking of creative and building on Bitcoin, which again, there's going to be a lot of maxis that are not going to be happy about this, Michael Saylor, he unveiled the open source MicroStrategy Orange Decentralized Identity Protocol at the MicroStrategy World Conference in Las Vegas. It was reported that Michael Saylor presented a very compelling case for why we need decentralized identity and decentralized identifiers. He made an even more compelling case for why it makes sense to anchor digital identity into the Bitcoin blockchain, protected by strength and security of the Bitcoin network. The whole idea is pretty simple. It's about burning a piece of data on the Bitcoin blockchain, and it opens the door to possibilities that you could burn a digital signature, burn a digital registration, or even burn a hash of a document. Right now, enterprises have weak securities compared to Bitcoin. And so the digital identity or digital identifier, it seems like it's not for personal use. It seems like it's more for documents and enterprises, so that if you're sending information or you don't want your team to get phished, you can make sure that these have digital identifiers that are operating off of, well, the most secure network in the world. U.S. Senator Cynthia Lummis from Wyoming has stated that she's deeply troubled by the Department of Justice stance on non-custodial software. She says this in her tweet. Yes, it's a tweet. I am deeply troubled by the Department of Justice hyper-aggressive argument that non-custodial software can constitute as money transmission services. This stance contradicts existing Treasury guidelines, common sense, and violates the rule of law. Arguments against self-custody software threaten the fundamental property rights and the core being of an American. I will do everything I can to fight for your rights to hold your own keys and run your own node. I can't even believe that this is actually a discussion, that we actually have to have senators and congressmen talking about this. Anyway, it just boggles my mind that these congressmen and senators are attacking Bitcoin. It just boggles my mind. Anyway, crypto advocacy group Coin Center has characterized the DOJ stances as a massive overreach, arguing that it contradicts the existing FinCEN guidelines and rulings. Coin Center's director of research claimed that the DOJ's position would mean that every functioning cryptocurrency wallet and smart contract is doing money transmission, and every developer is engaged in unlicensed money transmission. I think that the Coin Center's director is making a very broad statement here. I don't think that that is exactly what it means. However, it is saying, I do see them saying like, hey, you can't control your own keys because we want it to be on an exchange. We want it to be on Coinbase or any other registered exchange in the United States, so we can track money laundering and know your customer and all that other stuff, so we can protect you against the bad actors and all of that stuff. That's what they're saying. Again, tinfoil hat. I think this is just all part of regulatory capture. It's about like, hey, how can we, and this is why I see, because there's big money to be made in this. There's big money. We already see that there's big money in it. There's trillions of dollars in crypto. And this is with very little adoption. And so my tinfoil hat is that what you're doing is trying to figure out a way, because listen, the more Bitcoin Coinbase holds, the more money they have, the more power they have, the more they can earn, the more they can leverage it. It is, how do we get these assets under our management? And if you're holding your private keys, the assets isn't under anybody's management. I don't know. Just seems like there is some kind of regulatory capture here, and everybody's trying to work together to try to get Coinbase to hold these coins. Now, I'm not saying that's a bad thing for most people, by the way, but this is a way for everybody to say, hey, you can't have dollars in your mattress because we need to give it to a bank, and then the bank can have fractional reserve, and, there you go. They're making money. Again, tinfoil hat. What do you think? Matt at dailycryptonews.net. And finally, we have two kind of conflicting reports the same day. One saying that the bottom might be in and we're going to have a rebound, and Standard Chartered. And the other one says that the bottom isn't in yet. Well, you know what? You know where I stand? I'm going to let you know in a minute. Well, Standard Chartered said that Bitcoin could fall as low as $50,000 because it broke below $60,000 and reopened a new route to $50,000 to $52,000 range as its new low. It's already dropped 22%. Glassnode suggests that the market could be hammering out the local bottom formation right now, and it suggests that the market is currently still in the euphoria phase. By the way, link is in the show notes or in the notes in Substack. This is a must-read, by the way. Must-read is Glassnode's insights on the market right now. Please read it. Lots of data, a lot of good stuff. Link is in the show notes or on Substack. Glassnode said that a good way to identify whether you reached a local bottom is when short-term investors realize losses. They said that its historical data shows numerous examples from 2020 until now that show when 1 week or 1 month old entities realize losses, Bitcoin's price often begins to climb shortly after. I personally think that that's weak data. I mean, going back only to 2020 to show examples is pretty weak, because we're talking about different cycle movements and we're talking about different emotions during that cycle. I think that if you went back and they said, hey, you know what, we went back all the way back to 2012, I think that this would hold up. I'm not too sure. Me personally, I think that the bottom isn't in yet, and I think that we are going down to the $50,000 to $52,000 range. Actually, let me take that back. I do think that we're going down to the $55,000 to $54,000 range, and then we have the turnaround. Maybe I'm wrong. All I can say is if the bottom is in now, or we go down to 54 or even 52, it's pretty much the same in my opinion. We crossed into that $60,000 mark. That's what I always thought we would do, and then we'll have a turnaround somewhere between 50 and 60. And I think that the difference between 54 and 58 is nothing. It's nothing to even think about. If you said I want to buy the dip, buy it now. Not financial advice. If you were going to wait till 54, then I think that's dumb. Maybe you can get a couple more sats. Fine. Buy it then too. But this is the space that you should start accumulating, not financial advice. So anywhere between 54, 58, even 50, you buy there. I mean, it's either going to break up or it's going to break down. It doesn't really matter. If you're really waiting for a couple $1,000 difference, then that's just being stupid, my opinion. Again, sorry if that hurt your feelings. Now let's take a look at those crypto prices.
Here comes the money.
Here we go. Money talk.
And the time is 9:31 a.m. Eastern Daylight Savings Time. Fear Greed is at 47. We are in neutral zone, but we're trending toward fearful. Bitcoin sitting at $58,705, up around almost 2% in 24, still down 7% in 7. Ethereum's at $2,980, up 2.8%. Tether's number 3. Binance is at 560, up 2%, and Solana is up 11.7% at 137. Hopefully you beat TFD'd. You would have made 10% overnight. Running off the top 10, we have USDC, XRP, Dogecoin, Toncoin, and Cardano. The total market cap is at $2.19 trillion, up 2%. Bitcoin dominance of 52.6 and ETH dominance of 16.3. And that was our show today. Again, check us out on Substack, DCN Daily Crypto. And don't forget to check us out on Twitter. We're putting a little bit of work in there. And we have more things that we're working on that will hopefully be rolled out sooner than later. And until tomorrow, happy hodling, everyone.